Hey guys, it's that Dividend guy coming at you with another stock market news update. So today I wanted to cover what happened in the market. I took a little bit of a break from recording, but I did want to update you guys because Microsoft Corporation on Tuesday, so last Tuesday, they announced that the board of directors declared a quarterly dividend of 56 cents per share, reflecting a 5-cent increase or a 10% increase over the previous quarter's dividend. So it was 51 cents, now it's up to 56 cents. But the reason this is so significant is because we're in a hard economic time right now. So the whole strategy behind my portfolio and a lot of other dividend investors here on YouTube that I've seen is they buy quality companies. They buy quality, and they hold quality companies for this exact reason. Because all these companies that have had all these dividend cuts, like I've seen Gap, I think CenturyLink cut, I know Tanger Factory Outlets cut. A lot of companies have been cutting their dividends because they didn't have enough cash flow. They weren't stable enough to handle the economic times we were in like 6 months ago before COVID hit. So now all these companies are cutting dividends, and all of these people are getting slammed because, take Gap for instance, a lot of people could have been in that stock because it was paying, say, like a 6% dividend, but it wasn't sustainable due to the fact that stores are closed now. So you have to be more selective now than ever in history to pick your companies, because you have to pick companies that are not um, that don't need foot traffic for profitability. So you need to change or recalibrate how you're investing, because the airline shut down, cruises shut down, casinos are shut down. So like a lot of people who were chasing those yields in cruise stocks and even REITs and stuff like that have gotten slammed. So the reason I wanted to do this update was because you should reevaluate the companies that you're not only in, but also think about the companies that you're looking at getting into. So it's really important that you have to justify putting your money in there, and you have to prepare and expect is really the right word. Expect that something is going to go down. Expect that something is going to happen, and hold quality. Do research on your companies. So companies like Microsoft, who have the cash flow to not only pay their dividend, the 51 cent dividend that they paid, or 50-cent dividend that they paid before, 51-cent dividend that they paid before, they also have enough money on hand to continue to raise it in a harsh economic environment. This is what we want as dividend investors. So congratulations to anybody who is in Microsoft Corp. And guys, please use this. Newer investors, guys, I've only been in the market for like 2 years now, so I'm a baby in this too. But I chase quality that increases and pays me more over time. That's what I go for. Cash flow. I go for companies that will pay me no matter what is my goal. I know anything can happen, but I go for companies that have more than enough cash flow to cover the current dividend, which is exactly what you should be going after as well. So guys, again, use this harsh economic environment to not only re-evaluate your own portfolio, but take a look at the stocks you're looking at getting into and really kind of Libra scale it and see, is this going to be a salvageable business? Is this going to be able to pay me for the next 10 years? If it can't, then don't waste your time on it. Your job as an investor is to find the best performing investments that are guaranteeing you cash flow. That's the goal. So if it doesn't do that, then don't pay any attention. That's why I chase after the ones that have paid for 25 plus years, which, again, with Tanger Factory Outlets, SKT, I got burned on that because it cut the dividend because the foot traffic just plummeted for malls. But it was safer than, say, something like Gap. So, anyways, guys, sorry for the rant, but just use this as a lesson to really, really go after quality. And guys, anybody who is in Microsoft Corporation, congratulations on that nice dividend increase. My big thing with dividend investing, and the reason why I pull for it so much, is because tell me the last time you got a 10% increase with pay. When did you get a 10% pay increase at your job? That's why. And here's the thing. Tell me how hard you would have to work at your job to get a 10% increase. Probably a lot harder than you did versus the people who got an increase in Microsoft. That's why I love dividends, because it's completely passive. And if you pick the right companies, whether it might not always be a 10% increase, but even a 5% or a 2% increase on your income annually would be phenomenal. So anyways, guys, thank you so much for watching. I'll see you guys in the next stock market news update. Remember to hit the subscribe button, and when you do, hit the bell notification so you don't miss any updates. I post portfolio updates Monday through Friday, unless I decide to take a little bit of a break, but I do stock market news as well. So I will have a lot more videos coming out. Thank you guys so much for watching, and congratulations, guys, again on the Microsoft shareholders. Awesome. And I'll see you tomorrow with another dividend investing video. Take care, guys.